Good morning, everyone, and welcome back to Craw Park. Let's jump right on in. So today's video is going to be about Goldman Sachs, Citron Research, and why they bully other companies, and also earnings calendar and FedEx. Okay, so first segment, Goldman Sachs is saying, look, if we all wear masks, we can actually save the economy. So, as you know, Goldman Sachs is an investment bank, and their job is to make money for those of us that have pension plans, 401ks, and also for the investors. And so they're saying, look, we all wear masks. We can actually slow down the spread, and it's actually better for everybody. Okay? So they're saying that they can save our economy, our GDP, a 5% hit. Love this mask, by the way. Got to get one of those. Okay? So if you're out there, you're out and about, wear a mask, it's going to help you, and it's going to help the country, especially because most pension plans and 401ks only make money when the stock market is going up. All right. Number two. So in a previous video, we talked about how every quarter, most companies have an earnings release. They tell everyone what their profit or loss was for the previous quarter. Okay. And because we know this in advance, we can actually plan trades around these events. So here I'm using stock twits, but it's really Benzinga. They just put it in a nice package that I like better than Benzinga. So here I have the earnings calendar for this week. And so as you can see really quickly, you can just click on the day and it'll show you every stock that's going to be releasing, or every company that's going to be releasing earnings this week. So for example, yesterday we had FedEx. Today we have Macy's, General Mills, and several others, right? So I'm going to talk about FedEx yesterday. Okay, so FedEx is a company that we all know and love. They ship us packages. I mean, that's their whole business model. And so let's see what happened once FedEx released their earnings. All right, so this blue box here with a light bulb, that just means that their earnings. So their earnings was $1.42 per share. However, they earned $2.53. Okay, so they almost doubled their earnings. And as you can see, the stock moved appropriately. A giant gap up, right? And that was done after hours. So what usually happens is the company will release their earnings. So this happened around 4:03 p.m. right after the market closed at 4 o'clock. And then an hour later, they had their conference call where they have the CEO, the CFO, and they're discussing what went right, what went wrong, and what to expect from the company in months to come. Okay? And even the next day, today, the stock still went up. So, I mean, a really great opportunity to get in, get some profit. And I'm really glad that FX is doing well, which makes sense, right? Because we're all been shipping things more. We've all been buying things more online. And so companies like FedEx, UPS, Amazon, they're definitely poised to take advantage of the opportunity. All right. Now, let's talk about companies that bully other companies. Well, not really bully. Well, they kind of do. All right. So this is Citron Research. So they're a. It's kind of hard to say what they really are, but what they're most known for is shorting stocks, i.e., saying that the company that they're shorting is not going to do well, right? So they're basically saying, whenever they short or mention a company, they're thinking the company is not going to do well and they're going to make money from that company's downfall, right? So a lot of people don't really like Citron Research, but I mean, as you know, we can make money when stocks go up or down. And so a few days ago, Citron Research basically said that stock INO, which is, well, we'll talk about that in a second. So this stock has been a chew toy. Let me just read the quote, the tweet. So INO has become a chew toy for Robinhood traders, right? So those of us that use the Robinhood app, expect this company to get back to $14 very quickly, right? That's what they're saying. So let's actually go to INO and see what's been going on. Now, the tweet is saying that they're going to go back to $14. Well, let's see where they are recently. Let's zoom out a little bit. So, a few days ago, it hit a high of 35.57. So they're basically saying, look, we don't believe this company is any good, and they're going to lose more than half of the company's value. It's a pretty dramatic statement to say about a company that's been going crazy, right? So if we zoom out, we can see that they've been actually rising for a while. You know, a small blip here, but over time, I mean, they went from less than $3 to a high of, looks like 35. So the fact that they're saying, hey, look, we don't believe in this company, doesn't look too good, and they could be wrong, right? They're not always right. But when they usually tweet about a company, they have a lot of power in the industry, if you will. So that's what's been going on, right? So what date did this article come out? So this tweet came out June 25th. So the next day, dang, that's crazy. The next day, the stock closed lower than when it opened. Thus the red candle. And ever since then, it's actually been going down. So hopefully, INO can pull through, but I mean, they forecasted it was going back to $14, and right now it's around $20. So it's definitely on its way back down to 14. So, wow, that's sad. But anyway, for us though, that's a great opportunity because you can make money going up or going down. So that's actually going to do it for me today. I just wanted to show you those quick things. Goldman Sachs is saying, hey, be safe. It's going to save the economy, going to save the country. It's going to save actually a lot of our lives too and our health. I was talking about FedEx and their remarkable earnings. And so, as I said before, you can use those earnings calendar. They're already published far in advance. You can look them up whenever you want. And then, if an industry leader like Citron makes a statement, do your research, right? If you're into fundamental analysis and getting into the numbers, the balance sheet, the P&L statements, hey, it's a great opportunity because they called it. And if you were short on the stock as they were, I mean, you could have continue to make a great profit from that. So that's it for me today. Thank you guys so much for watching. I really do appreciate it. See you next video.